Leda, great to see you. Thank you for joining us and welcome to First View. For those of you who don't know, Leda is ex-banker, former executive from various fintech firms, and award-winning author. And thank you very much for joining me here.
Thank you for having me. It's good to be here.
Hey. So we met. We probably started working about 10 years ago together, and if I think back to that time, one of the things that really stood out was the challenger banks, and what the challenger banks could do, and how a lot of what we talked about was how they were going to change banking, and here we are 10 years later, nothing's happened.
It is actually so true. Um, and part of me is quite dismissive about this because I think so much else has happened in those 10 years, but surely nobody really expects them to disrupt the industry anymore. The narrative has moved on. The big challenges from the technology and the capability itself rather than the challenges. And then part of me is saying, well, how long is a piece of string? How long did we think it was going to take to build a properly profitable, scaled banking organization? Is 10 years enough? I think it's an interesting conundrum. If I look back 10 years, it's gone so quickly as well, David, like that's another conversation. But if I think about the challenges as businesses, then I wouldn't call any of them an unqualified success quite yet. But so they haven't had an economic impact commensurate to the amount of worry, but they have disrupted the industry exactly because people like you and I and the clients we worked with at the time thought they might. So I think there has been a lot of change. It's not the change we expected. It's not the change that we are prepared for or the disintermediation that we expected. But the impact has been considerable because in anticipation of the impact, we have seen quite a lot of the traditional players mobilize. Like the big thing was UX at the time, right? With that is not a contended arena anymore. And even the most crusty old institutions are playing differently.
Yeah, that's true. I guess it's probably the same with the fintechs as well. They've had sometimes the effect individually has been muted, but they've had an effect on the banking industry.
100%, 100%. And I would say that as part of my recent book, I did some research, and the statistics of failure rates among fintech challenger companies are as high as ever. They're in the high 90s in terms of percentages of companies that fail in the first few years of operation, 98% and above for the ones in crypto. So they're mostly failing. And in terms of individual financial endeavors, it's extremely brave and mostly not succeeding. But the impact on the industry, you're absolutely right, is huge. I think the attitude has been slow in shifting. I remember having discussions, particularly as a banker, with fintechs that were trying to play in the space that I represented. And 15 years ago, they would come in with a swagger of, I'm going to eat your lunch. The reality is that that hasn't played out. And so the need for banks to be either distribution channels or active partners or customers is very clear and present. So the narrative of how the startup, the challenger, and the incumbent need to work together took a long time to change, but it's changing now.
Yeah, it's interesting. I guess you could probably say the same thing about the Open API initiative and the open banking, that it hasn't had the world's greatest effect, but we are starting to see some elements of it of that creep in.
Yeah, I remember when the regulation was beginning to come down the pipe. I was so excited about it. And I remember speaking to the then chief risk officer of one of the big UK systemic banks, and he said very acerbic, do not expect a stampede. And I saw him about a year ago, and I was like, do you remember that? Because you were so right. And I was so convinced you were wrong. There hasn't been a stampede. It's actually been really depressingly slow, the adoption of open finance and open banking. It's in some ways the greatest story never told, because we were all either afraid or excited, but we expected it to completely rewrite how we do business, and it really has not. It is creeping in, you're right. But I do think that there were two bits that were missing. One was the the expectation that the consumer, because it's good for them, will drive the adoption of this, it's just not realistic. And the second piece was the economics piece. Nobody has quite worked out how to make money doing this, so nobody's leaning in more than they have to. I think it's an interesting one, because you were beginning to see some initiatives that are based on open finance that have a real chance to scale commercially. But I'm seeing everyone, and after I said I wasn't going to talk about politics, here I am going straight in. I'm seeing everyone pause a bit and go, well, we expect deregulation with a new administration in the US. Open banking had literally just landed in the US, hasn't taken root. What's going to happen, and is it going to change the pace of adoption globally? So you're right, we're seeing glimmers, but will they become something bigger? I really want them to, but I'm not convinced yet.
Yeah. Or maybe you're right. I mean, but maybe the time frame is just so different that 10 years is not long enough. That actually this is a heavily regulated industry. It takes a long time for things to come through it. And perhaps it's going to take 20 years, 30 years before you see any material change. And we can sit around in old armchairs and talk to each other. Do you remember when?
Oh, yeah. Do you remember
Yeah.
when we did that? And 30 years later, it's still relevant. So I sometimes joke that for as long as the industry keeps moving at this pace, I will be gainfully employed for as long as I choose to not retire. And it's a joke, and it's not. I do agree with you that the timeframes for these things will be long, and actually they should be long, and that makes sense. And 10 years in terms of creating new financial paradigms, actually, it's not that long. But we're not moving the way we should be. And I'm being very tentative here, because with every new thing that comes into the mix, we open the door to the possibility a little bit. We're not moving towards the future as fast as we would like. And some of these things haven't played out. And you're right, it might be 20 years or 30 years from now when we go, see, we were right. But we're dragging the past with us in a way that you and I 10 years ago had assumed we would have stopped doing by now. And that's one of the pieces of digital transformation and adoption we don't talk about enough. There is a lot of stuff we have started doing with various degrees of success as an industry and as players in the industry, but we haven't stopped very much. We're still carrying a whole host of legacy systems, legacy practices, which complicates this picture considerably.
Yeah, actually, that's a really good segue into some of this transformation work, because you talk about legacy systems. I mean, you've been involved in digital transformation, and that whole wave that ran through the banking industry about 10 years ago. They there still seems to be an awful lot to do, and those programs have largely ceased now. They've changing shape and they're moving in different directions. But yeah, what is your sense of the success of those programs, and what do you think we can learn from them?
It's such a good question, because as you say, for a time everyone and their dog was doing one, and there's this statistic being bandied about that 70% of digital transformation efforts fail. And it's such a universally quoted statistic that we all take it on faith. In fact, it kind of feels right. But I read somewhere recently that actually the success rate is not 30%. It's actually even lower than that, because of a body of a few hundred digital transformation programs assessed by that particular research, only 14% had goals set. Only 14% had defined what this transformation is meant to look like when it succeeds. So how can you tell whether it succeeded or not? And I think well, first of all, it's a terrifying thought, but it's also it ties to everything else we've been saying, because a lot of the leaning in we've done as an industry into digital has come from a place of fear, either contractual obligation to a client or a regulatory obligation to an emergent regulation, and everything we can fit in between. So I'd say that we haven't had a holistic view, because nobody can tell you what digital will look like when it's fully formed. Everything is moving, everything is morphing. So you start a process of transforming towards a thing that is slightly amorphous, slightly open-ended. How much do you include, how much do you not include? It was always going to be dynamic, so we might as well see how we go. That way of engaging is doomed to fail. Add to that the fact that with digital technologies, we've been better at starting things, not great at seeing them over the line or deciding that we can now switch off the old thing. And I'd say that the biggest problem with those programs, and part of the reason why they're morphing into something else now, is that we've extended, we've wrapped, we've greenfielded, we've stretched, we've done a whole host of sort of Frankenstein's monster work within existing operating models. And what we're left with is a hodgepodge of technologies and a lot of residual operating risk. So what's our exam question? If you're a financial institution or a bank, you're looking over your shoulder and you're like, I'm keeping up with the Joneses, though. None of the incumbents, none of my competitors have done anything different. We're all on the same boat, and that's absolutely true. But are we keeping up with the economy? Are we keeping up with the pressures that the reality out there will put on us? Are we moving at pace with the world? The answer is actually no. And I think that's the biggest question mark. Has the way we've done digital transformation delivered the goods? No. Can we stop? Also no.
Yeah, especially when you think about it, a lot of that digital transformation was really about changing the way the front end worked and changing the banking channels. To that in the fact that we rarely ever go into a branch anymore, it has changed. So it has changed the banking network. We do have, proper apps that allow us to do banking that I mean, some are better than others, but it has changed. I think the thing is that behind it, though, nothing's changed. So maybe all of that change budget has gone into creating these new channels, but
Yeah.
actually they're still running on 1960s COBOL technology in
Isn't it
many cases.
terrifying? It's absolutely terrifying. I agree with you. I totally agree with you. I wrote a piece a few years back called "I Want My Bling Where I Can See It," and it was exactly about that. How we see IT spend going on things that are visible either to the client, be it a consumer or a business, or to the street. So it doesn't necessarily mean just UX, as you say. It's the things that will be visible as a net additive. So it will be the interfaces, it will be your distribution, it will be things that you can have a nice PR release on. But the infrastructure, the guts of the organization, your core systems, your processing systems, your systems of record are creaking. And some of them are from, I mean, they're older than me, which isn't right. You shouldn't have systems that are older than me. And there's those COBOL-based mainframes, a lot of on-prem capabilities, a lot of stuff still done on spreadsheets, which is also terrifying, are just not responsive. You could say that they're good at what they were designed to do, but what we're asking of them today, they're just not designed to do. And we're creating operational vulnerability by carrying systems from the 50s and the 60s into the era of real-time system to person connectivity. It's insane that we're doing it, but we're doing it.
Yeah, and I think doing something about it is hard. I mean, it's very difficult. These things are deeply embedded, and of course, you see things that fines that are handed out for if you break banking service at all, that it makes everybody very, very cautious.
So now that you said the magic word fines, right? So we are sitting in the UK recording this, where there have been some pretty well publicized outages in the last few days.
Mm.
Two systemic banks affected, not the same issue, but two systemic banks essentially in the news for having outages that in one case exceeded 2 days. What will be interesting on the back of this is, people will forget, because once things are restored, particularly if you're not affected, the consumers will forget. But it will be very interesting to see whether the regulators will take an opinionated stance on this, because there are a couple of pieces of regulation that would allow you to hit hard should you choose to, either around operational resiliency under the DORA umbrella, or consumer protection. Leaving people without access to money for 2 days is a kind of a big deal. the regulator has an option to lean in and go, I know upgrading your systems and your operating principles is hard, but I'm going to make it non-optional. In my 20 odd years of doing this, I've only seen the regulator doing that once in Australia, where they looked at one of the systemic banks, looked under the hood, and the hodgepodge of systems was off the charts. They had 34 core banking systems. That's 3, 4, not 1, 4. I've never seen that many. And so the regulator was like, okay, this is a risk, and you need to put yourself on a slimming down regime. You need to show us. So systemic transformation and migration became non-optional, and they're still doing it. Will we see the regulator leaning in to solve the question that you rightly say is very hard? As a banking executive, it's one of the most thankless decisions to ever make, to migrate away from a system that works mostly and is mostly fit for purpose, taking on immense risk to move towards something that is actually more uncertain than what you've got.
Yeah, it's. I didn't even know there were 34 core banking systems you could have, but it was.
Not. Some of them were heavily customized versions of the same thing, but so customized they
Yeah.
weren't talking to each other.
Oh, they all get locked down then, and that's the problem. You see that across technology in lots of different areas, not just in core banking, but when you take vendor products and heavily customize them, they get entrenched, and then you have huge upgrade issues and change issues, and so much of what we learned in the last sort of 10 years, going on away from banking and the way that we run technology, the agile, the approved DevOps, when you look at organizations like Amazon, how they run technology, this is where we need to get to. We need to get to this very fast, very responsive technology. But unfortunately, it's not architected right. So there's a lot of change that needs to happen there.
You're 100% right. It's not architected right. So you would need to do a de profundis change. And there are some companies out there that specialize in taking you by the hand and saying, you explain the business logic to me, and I'll help you transform without necessarily doing it like for like. But the thing that isn't architected right isn't just the systems. The operating model isn't architected right. The risk model isn't architected right. So the way the humans come in to work every day is wired for a different way of working. And I think that's another area where a lot of digital transformation efforts have fallen short. You put in the systems, but you haven't upgraded the humans. You haven't got the right talent. You don't have the right time frames. You don't have the right risk matrices. And the two need to work together, because one of the biggest things that has been a slow realization for our industry is you shouldn't become too attached to any technology, because today's bleeding edge is tomorrow's obsolescence. So how can you create an organization that knows how to evergreen itself, to constantly change, to constantly adapt? It's more about process than tech, right?
Yeah, yeah, and there's so many factors inside these big organizations that defeat that. That even when executives set big change agendas or wanting to really modernize certain things, that
Yeah.
the owners of some of those old legacy applications dig their heels in and
Yeah.
try to stop the change.
100%. And sometimes it's comical. I wrote in one of my books about the fact that I tried naively as a young person who didn't, I was quite early on in my career, and I didn't necessarily appreciate the emotive aspects of these, but I was part of a piece of work that found a ridiculous amount of overlap between the functionality of certain systems, like to the 90s in terms of percentages of overlap. And so part of our proposal to the CTO was doing a whole host of things to increase productivity, to increase efficiency, and switching off one of the systems that would have a really nice, clean capital uplift eventually. Obviously, the cost had been amortized, but there was so much money being spent on maintenance and lights on and dedicated teams. And of course, the answer I got from the CTO was, I put that system in before you were born, young lady. As if that was an answer to why we should keep it forever. But it was quite tell. It was an education. It was very useful as an education.
Yeah. Yeah, the answer should have been, well, maybe it should have come out a while ago then.
Yeah, yeah, exactly. Considering
Yeah.
the life cycle of these technologies, right?
Yeah. It's just interesting when you look at so much of the banking spend at the moment. We seem to be in a on a bit of a trend of everyone tightening cost spend. The banks are holding things very tightly, even though the revenues are actually being pretty good. Ever since interest rates started going up, banking revenues have started to improve. Cost income ratios have improved. Um, the banks are holding that spend and they seem to be doing it, continuing to do it. We're probably getting on for the third year of this sort of tighter rein hold on spending. Do you see that continuing for a while?
I do. I do. I think you're right. We had an interesting time whereby people started tightening and controlling spend with the uncertainty of the pandemic. You saw a lot of organizations slamming the brakes on things that were actually working well and were on time and in budget, but they felt like a potential distraction. And I had a lot of sympathy for the executive decision making at the time because we were sailing into we've been talking about sailing into the unknown for a while, but actually with the pandemic that was just too pronounced. But that caution has not actually really corrected itself, and it was compounded by the fact that the difficulties of the financial crisis as experienced by a consumer was actually a bonanza for banks. I don't want to say they were printing money, but the interest rate situation meant that the banks were sitting pretty, having decreased the discretionary spend and also the pressure it puts on executive headspace, which is it's hard to quantify, but I would say it's at a higher premium than the spend. So those two events compounded itself. And I think there's an extra thing we don't talk about enough in the same context. We've had some failures, spectacular failures of neos and challengers. We had SVB, we had a couple of closures in the US, and we've had some regulatory issues that didn't close down some of the other darlings of the ecosystem, but definitely shook them, which meant that after having cut down on a few things and not really paid a price for it, having breathing space and a bit more room to maneuver, then you also had a silent proof point for your own business model. Because we like to beat up on the big legacy banks, but when HSBC comes in and buys SVB UK for £1, do you remember that? For £1.
Yeah.
And an equivalent transaction actually for no money at all happening in the US, the reality is that silently, it's a 1-0 for the traditional bank business model. So do I think we will see that caution continue? Yes, because the fear is gone, the pressure is gone, they're not being shown up the same way. And I'm also seeing behind closed doors boards coming together going, we've been approaching this wrong. It's not about which is the next technology. It's not about the next trend. It's not about being seen in some PR activity with the next unicorn. It's about a set of regulatory pressures, economic pressures, and technological pressures from a capability and threat perspective. And I need to see this on the whole. So I do think, that was the longest answer to your question. I do think that we will see that holding pattern on spend. And I'm hoping that we will see a wholesale change on how people face into the way they deal with technology.
Yeah, I think I've had a couple of observations of that, and I've heard the phrase "do more with less" being used more frequently. And what seems to be happening is as usual when a set of circumstances has changed, we adjust. We're actually pretty good at humans are really good at adjusting, and they've learned people are learning how they can do more with what they've got, and it's working. And I think that what's happening is you're too used to being addictive to big budgets and more spend, and you can have
Yeah.
whatever you wanted. Now you can't. You're learning how to do it differently. And it's creating a new paradigm where people are saying, well, actually, I can keep this going. I'm really inefficient, and start pointing at colleagues saying,
Yeah.
you're inefficient. Do better because you're pulling us all down. And with trends like that in the background, you could see how that, it's perfectly possible to reduce more cost and increase the efficiency and capability of technology kind of solutions that you're delivering to the business.
I think you're right. The caveat is that very often and I've seen this in quite a lot of large organizations, the mandate to do less with more comes from the top. And it is not rolled out like a program should, but more rolled out like a bulldozer would. And what you end up is with cascading pressure on the humans to fit more in their day, but with no real efficiency conversations, tools, enablers. So I have seen a lot of organizations I work with that have rolled out something similar, and you're finding yourself with middle managers who are wearing 7 hats, managing 32 teams. The numbers are completely made up, but all they're doing is working slightly longer hours, doing a slightly poorer job. Where the do more with less mandate is an efficiency one, I think there is a lot of opportunity where you say, okay, how much redundancy do I have in my systems? A lot. How much overlap do I have in my systems? A lot. How much complication do I have downstream because of some of my systems? A lot. How many teams do I have that are dedicated to the life cycle and needs of a particular set of capabilities that actually, if I spend some time and money, admittedly, uplifting and switching things off, I will have lower operating costs, lower exposures, and a smaller team that has less of a headache. If you do that, spend some time, which is a difficult thing, and money to streamline, then within I would say 24-month period, you'll be spending considerably less and doing a lot more with less. The difficulty comes in when people try to do more with less, starting from a standing start. And so you carry the inefficiencies because you don't give yourself the time to actually face into them and go, hold on a second, this doesn't work.
Yeah. How do you see have you got any thoughts on how you see AI impacting that? So, I'm starting to dislike this term AI because it seems to be grossly misunderstood. And actually, when you come down to it, it's a bunch of different techniques that can be used in lots of different ways. And the more you drill into it, the more you really get down to it, it actually changes quite a few things. But there's no doubt in what we've seen, and I think organizations have been experimenting with this in secret largely, and there has been some success. There genuinely has been better tools, more productivity enhancing tools that have really helped people in their work, and so it starts to feel like there's quite a lot to be done here, but it's really early days.
Yeah, I share your both your caveat emptor and your belief that it is early days, but the transformation is already being felt. I think there are a couple of forces at work at the same time, and that create tensions. The first is that um, the tools are already being used, and the first instinct in a lot of banks was to try and control it. Typical, right?
Yeah.
So you would have AI teams trying to create solutions, but then you locked it down elsewhere in the bank. And that has largely not worked. And I would argue that that's actually short-sighted, because this is going to be the paradigm for the next 10, 20, 30 years. You need your teams to build the skill sets to know how to navigate an AI powered world. And I don't just mean your engineers, I mean everyone. A friend's children school in Belgium were doing quite a lot of their homework is around how to learn how to prompt AI and how to use it as a tool and how to verify information. Completely different mindset, rather than assuming that it will lead to plagiarism, actually facing into the fact that this is part of the world. So I think trying to lock it out is not even short-sighted, because you need the skill set. I also really love that quite a lot of the banks have gone for really boring use cases, because I think boring is a really good place to start. And also that it will deal with the anxiety of dealing with the unknown. So you're not going to throw it into client facing stuff or regulatory stuff. You're going to use it for, sanity checking your code commits for types of errors and things like that. I think there are two problems at the moment. And they both come back to problems, not technology. The first one, which I'm hearing from a lot of friends who have worked in the AI space for a while, is that we are treating this thing as if it's fully formed and finished and new. And it's neither. It's neither new nor fully formed and finished. But a lot of friends who are in this space are saying that part of the challenge they have when dealing with banks is that they spend a lot of their energy in getting the AI pilot going, and they're done. They have no political capital, time, and energy left for when it starts hallucinating, and you need to go back and work out why. You need to clean up your data, find the reason for the hallucination and fix it in your data set, as well as, like, you can't magic the algorithm, right? If certain things appear inconsistently in your data set, you're going to have to fix it. So I think we're a bit naive about what it takes to implement these things. And we need to lean into it. That's not a reason to stop. The fact that it will hallucinate is not a reason to stop. It's a reason to bake in time to fix it. The second thing that is making people stop rather than lean in to work on it is explainability. We hear a lot of the use cases get stopped because either the compliance department or the regulator goes, yeah, but can you explain to me how it got to that answer? No, I can't. End of story. It shouldn't be the end of the story. Let's work towards getting to that level of comfort, because the reality, as we've seen with everything else, is that technology invention and adoption will happen outside our offices, whether we like it or not. So the question is, are we equipped to deal or are we not?
Yeah, I think it's a really good point that this is just the start point, and the use of some of these technologies is creating these issues like, can you explain it? Well, actually, there are ways to make that happen, but you need to re-engineer it, and you need to change the way that you approach it. And I think what you said about about data is is a huge thing that all organizations, I don't think it's just a banking problem, but the way we've always viewed data and used data in systems, it was built for a different time. And now if you're trying to make data like the fuel of the business, you need it needs to be clean, it needs to be fluid, it needs to be used universally through it. So there's a lot of work still to do in terms of just getting the core infrastructure to allow data to flow around the business.
100%. And that's before we even, I can't agree enough with what you just said, right? And one of the things I find funny or depressing, depending on what mood I'm in when it happens, is that even organizations that are on this journey and they know that they have to do what you just described are still not fully wrapping their head around what it means. So I was speaking to a very large organization not so long ago, and we were talking exactly about that. And I asked how they're managing the data shelf life, because there are obviously some regulatory constraints as to how long you should keep data for, but also there is a shelf life to the usefulness of the data. So there's the regulatory component, but also it's not good forever. And you could see the face of this person going, I can see another 5-year project opening now because I don't know the answer to that.
Yeah. Yeah, just the way we use, store and manage data, it's we're still there's still a lot to learn. And one of the things I think we're starting to pick up from early use of some of the AI techniques is data pipelining. That what you put into those AIs to do the automation is it's got to be clean, it's got to be right, you've got to set it up correctly, which actually is a different way of working. You have to think differently about the way you're approaching tasks, because if it's a lot of it's about data preparation before you even allow the automation to begin, That's not how we do things today. So there's quite a lot of process and business re-engineering that needs to go into it, all off the back of you've got to re-engineer the technology to allow the data to flow. Then you've got to re-engineer the data processes to manage that and allow these techniques to work. I mean, there's a long way to go. And going back to the beginning of our conversation, 10 years maybe isn't a long time in banking. Perhaps we shouldn't be expecting this to all of a sudden, like, it's not a magic wand. It's not, we're not going to suddenly be, all empowered with great AIs that do everything for us in the banking world.
No, no. But it's an interesting one, right? Because we have said a lot of things over the years that are true, but I don't think we digested them, right? How many times have we said change is the new normal? A lot, but I don't know that we've digested what it means. And what it means is this, that new things will be coming at us before we're done working out the old things. And so maybe 10 years is not long enough for new business models to play out, for radically different technology paradigms to play out. But that doesn't mean that all the other things are going to wait. So how do you make sure that your organization can cope with that? And it's a terribly difficult question. I was with a group of chief risk officers and academics. It was a fascinating conversation. And we're mostly talking in that particular session about the risks AI-powered malicious actors play in how the chief risk officer's office becomes a driver in technology adoption. Because if you're still based on checklists and your KYC is assaulted by deep fakes, how do you even detect? And so it was a very interesting discussion about how they never had to be on the forefront of this the way they have to be now. And one of the academics said, well, what about quantum? Because the reality is that quantum is not commercially available yet. It's not here, but it's coming. And there are malicious actors that are literally downloading the internet for when they will have the tools and capabilities to like turn it into a bad thing. And we don't know what that's going to look like, but we can see it's like Armageddon approaching. And the reaction of the chief risk officers was a very human, I can't. I have no budget or headspace for this, which is fully understandable, but like, so what? It's not going to stop because you don't have the headspace for it. And I think that's the biggest change that has happened in the last 10 years, is that the creeping realization that we actually thought that things would move at a pace dictated by the financial services industry. 10 years ago, we thought we were in control of the pace. Now we definitely know we're not.
You talk about quantum. My initial reaction would be, that's multi-decades away. But then you would only have to see something like the deep seek shock to be able to say actually things can come out of the woodwork that
Pretty
uh,
quick.
yeah, they can change and have big impacts. But
Exactly. And what you said right at the beginning is also something we were blind to, naive to, maybe, is that things don't need to be successful in themselves to be disruptive to you. If I think back to the beginning of my own journey, we equated those two. Like we looked for, say, the business ideas or the technology adaptations that were going to be successful in themselves, and through that success have an impact on our business. But what we've seen over the last 20 years is that those two have not been aligned. You can have hugely disruptive ideas that actually don't yield economic benefit. The business fails, but it still has an impact. And so the deep seek example is a really good one. Whether it's true or not that it actually managed to get to the level it's at such a considerably lower cost and time, we might never know because of the disclosure obligations of Chinese companies. But has it put the cat amongst the pigeons? It has put the cat amongst the pigeons, right?
yeah. I think we'll see more of that as this unfolds. I mean, the idea that we're not going to get more efficient and better at this, and new techniques are going to, I think that's, we'd have been mad if you thought it was all going to be the same. This stuff just gets better. Um, and we'll make some false turns as well. I'm sure that the technology will take us down some false paths, but there's a lot here that I think can genuinely change what it is we're looking at.
100%. 100%.
Leda, thank you so much. It's always great talking to you. It felt like we could have picked any one of those topics and spoken for an hour on it. But thank you so much for joining me here on First View, and hopefully you'll be able to come back again soon.
Thank you for having me. It was fun.